Welcome to Let's Talk Horses. I'm your host, Jason Vance, and joining me today is Peggy Miller, a equine specialist with Iowa State University Extension, and we're going to talk about tax issues with a horse business. Now, Peggy, for tax purposes, what is the most important thing to do with your business?
Well, the government uses 9 rules for businesses, but the number one that they're going to look at is that you run your business like a business, and that means that you have a profit motive. That's number one. You have to prove, if you get audited, you have to prove you have a profit motive. Included in that is record keeping. It could be marketing and advertisement. It could be keeping a separate checking account for your business versus keeping everything in your personal account. It could be included in that keeping track of if you have a your breeding program and showing them that you have that program available. And so it's showing that you're out to make a profit. Even if you don't, but you have a profit motive.
Now, there are a lot of rules that the IRS uses. What are some of the rules that they require of a business?
Well, some of the rules, besides number one with the profit motive, would be the use of experts. And with that, an expert could be someone like an extension specialist, but it could be an accountant. It could be going to a trainer, a veterinarian. It could be going to a class, and so that you're showing that you're trying to improve upon yourself. Another one would be the amount of time you spent in the business. They have a 500-hour rule. Now that's easy to do if you own a business, because you're going to put that time in. I have a boarding business, I clean stalls, I feed horses, and so adding that 500 hours is easy. It's harder if you're kind of a silent partner, but you can use a spouse's hours, like if they're keeping track of records. You could use a spouse's hours in that 500-hour rule. There's another rule. They'll look at if you have another business of some type, if that's profitable, and if you run the horse business like your other business. That may not apply to everybody. There is a 2 out of 7 rule, which means that you're supposed to make a profit 2 out of 7 years. In the horse business, every other business, they give 2 out of 5. Now, with the 2 out of 7, it could be like a farm. You may not make a profit in 7 years, but if you have a profit motive, you can prove you're trying to make a profit. The main difference there would be if you make a profit 2 out of 7, then the government has to prove that you're not a business. If you don't have the profit, then it's up to you to prove that you have a business when you get audited. And so they'll treat that a lot differently in terms of if you were audited. Another rule would be if you get pleasure out of the business, and that's a little bit harder with horses, because most people would get pleasure out of the business. But you can, if you have horses and you're cleaning stalls and you're going out in minus 10-degree weather or hot weather, and you can argue that fact. Another rule is that if you have personal horses, well, it falls in some of the other rules, but if you have personal horses, you really should take the cost of those personal horses out of the business horses. An example would be if you have a 4-H horse. It's really not a business horse, and so you're supposed to deduct those cost of feeding that horse and everything from that particular business. Now, if you're out to sell that 4-H horse, then you might put it in business in terms of taking that money out.
So, when dealing with tax policies, it's probably a good thing to definitely seek help from experts in preparing your taxes for
Oh, yes, yes. I use an accountant that has a horse background. I would state, one of the things would be to try to use an accountant that has either an equine business or has worked with equine businesses, or if that's not possible, a farm background, because they'll look at it a lot different than one that has not used animals for a business.
What advice do you have for owners of horse businesses as far as taxes go? What advice do you have for them?
I would, the one would be that try to use a Schedule F, that's farming, compared to a Schedule C, which is small business. You're less likely to get audited. Another would be to try, one would be to understand those 9 tax rules and to meet the requirements of that. Horses do have a red flag with tax people, and so they're likely to at least possibly get audited sometime in their career. And so to understand those 9 rules would be very important.
Well, Peggy, thank you so much for talking to us about tax issues in the horse business.
Thank you.